So here's your other one in the financial sector. So once again, kind of same scenario broke out just like energy did. And I'm looking at DFS, Discover.
Uh, oh, that was the one we were just talking about, the recovery with the high. Okay, I'm with you. Go
So,
ahead,
and,
Em.
it was between this and COF. So if you want to take a quick look at COF, it was between that and COF, but I went with Discover.
Ooh,
I
I like them both.
know. I had to pick one. I couldn't bring both. So I went with DFS because DFS had that.
All right. Technically, let me get Mark and Tim's take really quick on it, just technically.
Okay.
Do you prefer the strength of COF with the high base that it's already reclaimed the previous pivot, or do you prefer the little recovery high base play catch up play here on DFS?
For me, from a timing perspective, I think DFS is a little cleaner here on a Tuesday. Obviously, the strength is something you can play momentum on. I'd pick DFS. I like this little pattern developing here.
Mark?
I like DFS too.
Yeah, I think I'm on. I think I like DFS a little bit more. Okay, so you pick DFS as well. All right, M,
DFS.
go.
So again, simple technical analysis. You can see that high at 100, high basing at that 94 price range. So it's a quick move to 100. So with this one here, I wasn't thinking more of doing any stock positions. I was thinking of playing the option, and we could do the modified covered call and look at perhaps maybe even doing a poor boys covered call, or just go bull call and just play it directionally, but still as a position trade.
You know, I honestly, if you're looking at it from a swing trade, I love the $100 target. If you're looking at it from a position trade, I think you're targeting above 100 here. So swing trade, I love the quick hitter to 100 here, and it would have to be aggressive, and it would have to be literally right now. Like this is, if you're swing trading that aggressive style, you see that cash open, you see the retracement, you're threatening a breakout against the intraday. I mean, it's that swing trades now, or it's not never, basically, right? The position trade gives you a little bit more flexibility and patience and whatnot. So, okay, so we're going to dial this in. Swing trade with the intraday breakout, quick trip to 100 on DFS. I don't think we need to spread it up. I think we go straight call here, guys.
So a call on DFS or a covered call on.
I don't think the volatility is where we need to offset that. I mean, 48% volatility, guys, is historically high on Discover, but it's not historically high for right now on Discover. Like this is pretty normal for the marketplace.
Well, and just look at the cost. I mean, if I pay $6 for the in the money or at the money call option at 50, you could play either that or the 97.50.
520.
$5-6 on a $95.
Yeah, and if I did a spread, it would be something like a 97.50, 115, right? I want lots of
less than.
I was actually looking at the 95 115 if we were going to do a bull call, if we were going to spread it.
On the spread 95 115, I probably do the 110. Like the 95 by 110, even the 97.5 by 110 makes sense too. I don't mind the 95 by 115. I just don't think you're bringing in enough. You're only bringing in like 18% to offset that. I think if you are looking spread, and I know this might be a little bit more advanced than some people listening, but you know what? That's what happens when we talk option strategies. So when you're looking at this here, when you're looking at a bull call spread, you want to get somewhere around a net average of 25 delta with a 40% cost reduction, right? In that ballpark, right? I mean, you can modify whatever the numbers are, but in that ballpark. And so if you look at the 48 and you sell the 110, the 48 delta, and you sell the 22 delta, what does that get you? 26 net delta?
26.
Okay, and if you buy it for say 530 and sell for 180, you're offsetting about 35% on, like, I'm just ballparking numbers here, but it's close. It's close enough. And again, that's pretty much where you're going to get with implied volatility at 48. So if you are looking at the spread, I'd probably look in that range. And I was just doing longer time frames here for the position, because this would be a little bit longer time frame. So I kind of like that. Now, if you're going to go
We go straight call.
If you go straight call, honestly, let me just, if you go straight call, you buy the $100 strike price.
I mean, that's where we're targeting.
I mean, you're targeting 100. Don't get me wrong. When in doubt, I always go 50 to 60 delta. But I mean, you got a ton of open interest right there at 100, and that's going to be a little tighter. You can probably tighten that up there. You're fine at 97.5 too, though. I don't know. I kind of like the simple trade. I kind of like the buy the call swing trade on Discover versus the covered call position trade on Exxon here.
Mm-hmm. Mm-hmm. Now, here's an interesting caveat. Obviously, as we're looking at this chart on the intraday, it just moved like $1.50 in 5 minutes. The second we started
I
talking
think
about
tackle just triggered.
Why
Like-
we were talking about
Like
it.
literally after I said it's got to be now.
well, look at the volume.
Like tackle. I mean, my goodness, what are you
Can you people
doing,
wait
guys?
till
I mean,
till the show is over before you tell us what you're
let's
doing?
finish the analysis. Let's do the would you rather part of it.
Yeah. This is an interesting one. I'll go first on the would you rather part of this.
I think we just
I
got
think
our
the-
answer, bro. Like,
You're going with Discover.
I already own Exxon. So now you've got me thinking maybe I should write a call against it after the pop that we've had on it because I don't have it covered as of yet. So I'm thinking through that just from a personal perspective. I like the Exxon cover call. If you can get that kind of return on a cover call on ExxonMobil, who's a dividend paying company, that's the market we're in. It's a beautiful thing for cash flow traders, but I prefer DFS here. I like the chart setup. I like the technical setup. I think the bull call spread through Delta is a good way to play it in a market like this. You got limited risk, limited cost. You can get the access to it. Still got 60 days. Yeah, I think DFS here is.
I like the DFS quick hitter to 100. I think it's a good play. You got strength in finance to start the week. This is a clean breakout on the daily chart at 95. The intraday had the snapback and then just basically destroyed the snapback. So I you know, you never know because the market's fickle, but this feels like it's $100 by like